Market Master of the Day is with us, Gautam Trivedi, co-founder and managing partner at Nepean Capital. Gautam, great to have you with us here. Thanks very much. Good morning. We are in uncharted territory in that sense with new highs. Somebody I was talking to was saying that typically what happens is once you cross these big levels, you add another, 10-15% before you should start to think about fading moves in any significant way. Would you kind of agree with that, or you think a lot is priced in now?
Here's the thing: the Indian markets as well as the global markets have been driven primarily by an avalanche of liquidity, and in India's case specifically, it's more foreign-led, especially since the last 4 months. Global markets basically have been on fire year to date. So we've seen about $6 trillion of market cap addition this year alone. So clearly, it seems that the investors have forgotten about or just gotten tired of waiting for that ever elusive U.S. recession and have just plowed back into the equity markets. So if I look around the world, you're looking at the MSCI Emerging Market Index, which is up 9%, but the MSCI Developed Market is up double that, 18%. Nasdaq's up 43%. The CAC, the Nikkei, and the DAX are all at lifetime highs. So I think it's so much to do with liquidity, and to try and forecast when that will slow down or taper off is very, very difficult at this point of time. If you look at just in the last 12 weeks in India alone, we've seen a cumulative $15 billion of net FPI inflows. So I think the quantum of money that's coming in to India at this point is massive. And bear one more thing in mind, that our valuation is exactly that, i.e. Nifty 50's valuation at 18.5 times calendar 24 is exactly the same as the S&P 500. So in spite of that, foreigners are finding value in the Indian market versus their home market.
So Gautam, hi, good morning. What do you do in a market like India now? Where do you see some kind of alpha generation? I know it's very hard at the moment, but do you think technology stocks are coming back in a big way, so it's better to jump in there? Any new spaces that you like, or, for the next 12 to 18 months?
No, I think, Samya, you make a fair point about the Indian IT space. You've seen, I think, between mid-Feb and mid-May, the Indian IT, the Nifty IT index fell as much as 15%, but it's bounced back over 17% since. So it's regained all of its loss. TCS is up 8% since. Infy is up 14%. And I think the rally to a great extent has been caused by the likelihood of either zero U.S. recession or a milder U.S. recession. I mean, just to put things in context, I was in the U.S. in the month of May, and there were literally no signs of any recession. Inflation was raging, is very sticky. A cup of coffee, $6 for a latte. Locals said we've never paid that much for a coffee in our lives. The cost of a Uber ride from Midtown Manhattan to Newark Airport was $100. I mean, this is serious inflation, and no one's seen this before in the history of America. So I think these are issues that clearly don't suggest any sort of a looming recession in the U.S. And if that's indeed the case, I guess the bet people are taking on the IT stocks is maybe the worst is priced in. Infy at 20 times, I don't think is really a bad bet at this point. So that's, to answer your question, I think IT certainly come back because of that. I think banks still remain, great. They're not expensive. We continue to like that space, and I'm, of course, have a bias for the private sector banks. But if you look at RBS half-yearly financial stability report, gross NPLs are now down to a 10-year low of 3.9%. Net NPAs are even lower at 1%. So clearly, banks are well capitalized. So I would continue to look at banks as well. And on the emerging sectors, I think the EMS companies, and now there are more than 8 of them that are listed. So there's a wide choice, and I'm sure there are more coming that will get listed over the next 12 to 18 months. But I think that's a space to watch out for. That's going to be increasingly an area that's going to drive productivity, is going to drive job gains in this country.
Hi, Gautam. Good morning. Gautam, any fresh, sectors that you'll have increased your allocation out there? I recall Bharti Airtel was a stock that you liked from the telecom space. You're sounding quite confident on both IT as well as banks. Anything new that you'll have added, say, in the last couple of months since we last spoke?
Sure. We haven't bought Bharti Airtel. I think that was more a response to the question you'd asked specifically because it's the only real listed play as of now. Jio's not listed. And Vodafone, of course, it's a crapshoot if that's going to survive. But in MTNL, I guess the government's thrown in the towel. So Bharti is the only one that's really left standing from a listed play in the way to play the mobile telecom play. But having said that, I think the EMS companies is what we like, as I just mentioned. There's going to be huge potential there. Defense companies, finally, I think, are getting their space in the sun. Of course, a lot of those orders are going to public sector defense companies, but I think more of the private companies will also start to benefit. So I think that's an area, and that's clearly driven by the Prime Minister. So and this is a promise which I remember talking to even an L&T about 8-9 years ago. They had built up the whole infrastructure. They were waiting for defense orders, which never really came. But finally, I think that's starting to happen. So I think defense would be an area to focus on as well.
Got that. Look at Polycab. We were talking about that earlier. 4.25% higher on Polycab. Stocks at about 4,300. The management joins us in about 5 minutes or so. Gautam, any thoughts on this one, Polycab?
Yeah, I think there is a huge resurgence in the real estate space, and a company like Polycab and anybody's sort of within the building material space is going to usually benefit, whether it's the ceramic companies, whether it's companies like Polycab, or even the Bajaj Electricals, companies like that will usually benefit. So I think I'm kind of glad in some sense real estate's made finally a comeback after 8 years of really doing not much. So I think, Polycab would be, we don't own it, but we don't, we think this could be an interesting company.
You don't own it, but is this space something where there's still more earnings and valuation upside? I'm asking because, stocks like Polycab have more than doubled in the last 1 year, right? These are well-identified names. So do you think there's any juice left here? And if not, what does one do?
See, the thing is the mid-cap space, unfortunately, has run up way ahead of its, I guess, fundamentals, and some of these valuations are very, very high. I agree with you. I would wait for a correction, and I hope there is one in the market, I think, overall. And if that were to happen, I think I'd focus on names like Polycab or some of the ceramic companies.
Given the current valuations and the current setup, Gautam, what would your asset allocation strategy be? Maybe the markets were expensive a month or so ago, but it's still higher.
Yeah.
And there's a high possibility that we move up a little bit from here on as well. But at current juncture, what would it be? If you had to allocate to, say, real estate, bonds as well, fixed income and equities.
So, I think if you take a cue from what the domestic mutual funds have been doing, this month, literally this month, in the month of July, they've sold over $1 billion. If you look at retail investors in terms of their liquidity and their preference of investing more into the equity markets, for the last 4 months, they've been continuous sellers. So if I look at this fiscal year, and I have the data as of the end of June, domestic investors, retail investors who invest directly into the market, they're a negative 21,000 crores of selling. So that clearly tells you that people are looking at alternatives like fixed income because yields have clearly gone up. You're getting a Shriram Finance rather, yielding you anywhere from 9.5% to 10%. So I think these are all pre-tax numbers. So I think the fact is there are alternatives to equities emerging finally, and of course, people who book profits in the equity markets are buying real estate.
Okay,
Gautam, you mentioned this even the last time about fixed income, but logically, it'll be good to take some allocation out there. But the markets, mid caps, small caps, large caps, everything have moved up from I think you mentioned a similar point in April or May odd. But from there, we're still higher. So it's a very tricky situation, I think, for investors out there.
It is. It certainly is. So I think, but I think the fact that if it's 4 consecutive months of selling by retail investors gives you a sense of, what they're thinking, and they'd probably find the market too expensive at this point.
Okay. Just one more word. Okay, all right. We have actually run out of time, Gautam. Thanks a lot for joining
Sure.
us and taking us through your views.